Happy New Year, everybody. This is Cam Dales, co-founder of Peak Energy. Welcome to the IONS podcast. And today I am super thrilled to have Marek Kubik with me. Most of the guests on the pod tend to be old friends. And I have to say, Marek, if I can be so bold, we've never met in person, but it feels like we're old friends. We've got a lot in common, been in the industry for a long time. And I am just thrilled to have you on the pod, share your expertise around what's happening in the energy storage space. You have I would say, quite an active presence on social media, one of the smartest commentators out there on what's happening in the world of batteries and storage, and a really interesting background, at least I think so, being within the industry from kind of its beginning days, part of one of the iconic companies in the space, Fluence, and now sitting at a well-known player in the Middle East with a view, I think, of what is happening worldwide that's quite unique, given your position in the world, what you see coming out of China, Europe, the U.S. I think you have a broad perspective, so I'm just super excited to get down into it. So, Marek, welcome to IONS.
Thanks a lot, Cam. Look, it's a real pleasure to be here as well. Listen to a few of the first episodes, whether we're old friends or new friends. I think you could put it both ways, but I'm excited to be on. You've had some great guests already so far. And really thrilled to be here and to get into some of the interesting stuff going on in the space.
Yeah, I like to call them new old friends. Well, great. Why don't we just start with a quick background, if you don't mind, just kind of orienting folks to kind of your career, just briefly. We'll dig into some of the details later. I think that there's some quite cool stories, and people will be very curious about how things developed from the early days all the way through to where we are now, which is quite different from where things started for sure.
Yeah, it's a weird time dilation thing. I don't know if you feel this as well, right? The events from the very first days of the industry don't feel like all that long ago, and they're starting to get further and further away now. I've been in the space about 16, maybe even 17 years now in grid scale energy storage. So I was very sort of, let's say, the early days.
I didn't even think grid storage was even a thing 16 years ago. I mean, really, when do you think that the inflection point was when the industry grew up to be important and a major force in the energy world? It wasn't too long ago, really.
I mean, there's a few different inflection points you can pick along the way. I would say this, I'm a little bit biased given the route I've come through, but the early AES energy storage days, which maybe started as an internal idea within, for those that don't know, AES is a big Fortune 500 energy company in the US, but started sort of in-house as a solution to particular problems facing the generation fleet that AES had around the world. Those very early days are what led to the idea of selling the technology to third parties, because very, very early on, you couldn't buy a battery energy storage product off the shelf, right? You kind of had to assemble your own products, your own equipment. And so really one of the landmark moments for that, I think, is around the 2008 time, where the first sort of commercial grid scale battery project was deployed in the world. New York Times recently wrote an article on this, and I was in Chile back in 2008. So that was my timing in getting into the space was pretty perfect, because a year or so after that project happened, and the very first sort of internal projects were happening with AES energy storage. I joined a basically PhD track program with AES as an industry sponsor. And whilst that wasn't specifically on battery storage, it was kind of more generally, what are the opportunities and impacts of renewable generation on the existing fossil fuel markets, on existing generation fleets. That quickly led into flexibility as a challenge, and it quickly led into batteries as an opportunity to solving those problems. So I was introducing my history, and we almost already got sidetracked. But so I've been involved since about that.
Won't be the last time.
Yeah. So since about 2009, and then I was one of the early team members inside AES, got involved with the energy storage, say, division or business unit within AES in those first 3 or 4 years. And then after I finished the PhD program in 2013, I was offered a job to join, and then I started working on developing some of the first battery projects in Europe. Later, AES and Siemens joined forces to form Fluence, which is probably what I'm maybe best known for in the past. And I was with Fluence through the whole startup scale-up journey through to the IPO. And then about 3 years ago now, I moved out to the Middle East, largely just because I saw this as kind of one of the final frontiers of where storage is going, right? How do you build 100% renewable grids? How do you get to round-the-clock renewable power, really long duration storage systems as opposed to the sort of peak shifting or frequency regulation projects from the early days? So that's a bit about it.
Fantastic. Yeah, no, there's lots to unpack there, and definitely want to dig into multiple aspects of that. But why don't we get started with, given that it's the new year, I'd love to hear your perspective on where we are as an industry, and as an industry, I'm definitely focused on kind of grid scale storage industry. Set the stage for us. What is the state of play today? What's happening in the different regions? There's a lot to dig into, I think, on what's happening in China as well. But if you wouldn't mind just kind of giving a broad brush view from your point of view, sitting in the Middle East, seeing what all the suppliers worldwide are working on, and where the industry's going. Just curious to hear how you think about state of play.
Yeah, there's a few trends that the final numbers will not be out for the end of 2025 quite yet. I'm sure they'll be there soon, but I can confidently say pretty much at the end of every year, with very few exceptions over the last 15, 16, that we can say it's been a record year of growth for deployment globally. So larger and faster deployment than we've ever seen before, with those trends expecting to continue. And these are all kind of, say, virtuous circle things where the large scale of deployment helps drive down further pricing. So what we've also seen is record low pricing. In China, that's always been, I think, the case, but we've started to get a little bit more transparency about what's also going on in the Chinese market in terms of grid scale storage prices. But what's been more interesting to me is actually seeing that starting to spill out to more markets around the world. Middle East is a great example of that, largely because the scale of projects here are very large, which make it an attractive sales proposition, but also there's very low barriers to, let's say, Chinese supply, unlike, for instance, the US market, where there is a little bit more of that protectionist wall, which means that the prices are a bit higher. So record pricing in China, but also outside of it, we're starting to see that really drive down. And then the last part of that virtuous cycle, to me, I mentioned it a little bit earlier, is the increasing deployment of longer duration systems. So in markets like the UK, in Italy, in Australia, in parts of the US, we've started to see longer and longer duration, like 8-hour systems now starting to be deployed. And as a result, you're starting to see also the market orientate itself a little bit more towards these longer duration systems of what do you do to optimize for these sorts of use cases, these sorts of environments. I think I'm kind of more starting to get into the forecasting territory a little bit with that, because I'm starting to think about what comes next. But we've already seen a little bit of this in December. Hythium, for instance, one of the largest suppliers in the stationary storage cell space, announced an 8-hour cell, so a 0.125C battery cell, which is really optimized for these longer durations. And I think at the system level, that's a direction of travel we'll start to see more and more as we move from, the initial frequency regulation, peak shifting, to really full day night cycling of renewables, and getting closer and closer to that, 100% goal.
Yep. No, I think it's a really interesting trend, and it's something that we have believed in since the beginning, which is that, the industry started essentially repurposing EV batteries. It was, lithium-ion cells that were reaching scale through that application and brought costs down to where grid storage started to make sense. As you pointed out, definitely on the shorter duration side of things, all sorts of different business models that were viable at the time. Now, as we start to see, longer and longer durations, you're starting to see real specialization in the, building cells purpose-built for the grid, whether that's a long duration, very low C-rate cell, like what Hythium has done, whether it's alternate chemistries that maybe are better suited to stationary storage than they would be for mobile applications, et cetera. How do you see, I mean, one of the things that's been in the news, Ford had a big announcement that they, were shutting down a bunch of their EV cell manufacturing and moving into the energy storage business. And, I don't know whether it's been how public it is, but certainly the rumor mill is that they're partnered with CATL, and using much of CATL's sort of sales force and capacity. And, they of course have a deal with CATL around IP on their LFP lines. But how feasible is it for a car company to just convert over their capacity from EV cells to the grid storage space? How do you think about that?
Well, it's not an easy shift. I mean, it does depend on the chemistry, as you've kind of alluded to start with, because we've seen it's not the first car company to try and do this. We've had, let's say, Mercedes. I think it's probably about 8 or maybe it's even closer to 10 years ago now. Tried a sort of shift more into, I think it was the residential storage space, using their either second life EV batteries. But it comes down to that choice of chemistry. Now we are starting to see more LFP being used in EVs as well, which, again, as you've alluded to, are better suited to stationary storage. But and I don't know the particulars in this case, if that's what we're talking about, or if it's repurposing using NCA or NCM chemistry, the so-called ternary chemistries, which really are starting to be more and more squeezed out of the market. Again, exactly as you say, in the early days, almost entirely you were using these sort of EV-based batteries because just that's where the scale was. But as you look to the characteristics of what is required for stationary storage, it's a different set of priorities and parameters. And so it's not necessarily an easy switch. And the most famous example of a company, I guess, working in both the car space and the EV space is Tesla, right? But they're not necessarily also doing the same thing in both of these spaces. They use different chemistries for the different use cases. So
yeah, completely different cell. Yeah. You touched on something that I'm curious about as well. So the Hythium cell, what do you think is different about what they are doing there that makes it unique to the long duration use case? And then I would also love to hear your perspective on what are the economic drivers that are moving the industry from shorter duration to longer duration.
So there's limited details so far, but the details that we do know confirm essentially it is a large format cell. So meaning most cells used in grid scale storage are of prismatic form factor already, but in the early days, again, they were driven by EV dimensions. So the first CATL actually started probably the trend with 280 ampere hour cells, and this very standard size and shape, which was being used in EV buses, then came across into the grid scale storage space. So as you go to longer duration storage and lower C rates, your biggest issue is heat dissipation. And the advantage of designing for longer duration systems, which started with 2 hours, moved to 4, and now it's moving to 8, is that you can go to a larger and larger format, and that heat dissipation is less of a problem. If you tried to use the same cell at a lower duration or higher C rate, you would potentially have much faster degradation or potentially safety or other issues. So that's a balance you have to strike. But the advantage of going larger is essentially more efficient use of materials, right? You have fewer casings, fewer connectors, fewer everything. And so that can get your costs down, and it also improves your density, because if you imagine just the spacings between the cells, the thickness, although it's very small, it adds up in millions and millions of cells, right? Between each one of these being produced, those efficiency gains are not trivial when you're dealing with volumes of millions or even billions of battery cells. So the trend towards larger is one we're generally seeing across the industry, but this was, I think, just quite an interesting one because it's the first one to not optimize for 4+ hours, as most of the market does, but actually to claim something for 8+ hours and go even. And it's very large. I don't remember the exact size, but it's over. I think it's 2,000. Sorry. Well, it's over 1,000 ampere hours. So just to compare,
Yeah.
for the 280 or the 314s that are commonly used.
Yeah. Yeah. So call it 3 to 4 times larger than kind of a typical LF280 form factor prismatic.
Yeah.
Yeah. That's a massive cell. Do people worry about safety and, fire propagation, all that sort of stuff as you go that large?
So, well, it's the same chemistry, and as you'll know about, maybe it's worth restating for listeners. So LFP, it's safer, but always things are sort of with degrees of relative comparison, right? It can still go endothermal runaway. It's harder to initiate a thermal runaway on an LFP cell than an NMC, but it's still possible. The specific safety mechanisms, again, there's no details that have been released on that to be able to comment on how it's been done. I would say likely, I mean, safety is the first priority. It's kind of like a minimum bar to meet, right? It has to meet a level for it to be considered. The more likely impact is just the question around lifetime and degradation, and how long will are you trading this larger format cell having density improvements, having upfront cost savings, but resulting in a shorter cell life or less performance over time, right? That's kind of, I'd say, probably where the bigger issue is, but it depends, right, on how it's been thought about.
We shall see. Certainly lots of dynamic innovation happening worldwide, really focused specifically on ESS as an application, separate than where things are going for the electric vehicles. Certainly that's the trend that we've been seeing as well. What's driving the economics towards 8-hour systems versus say 4 hours, et cetera, 2 hours?
Well, it's sort of market dependent, but this is where Middle East is a pretty good case. But anywhere that you have like a good irradiance profile, it's essentially solar firming, right? And Middle East, Saudi Arabia especially, to call it as an example, right, has the lowest sort of solar prices that get awarded PPAs in the world, right? So you have record low solar costs, and that's only helpful if you can actually absorb all that solar to the grid and you don't curtail it. So you start to need, in higher renewable penetration systems, the need to bulk shift that power. And it's actually a relatively recent development because of how aggressive these cost declines have been in the last few years, right? The cell system prices fell 40% between 2023 and 2024. And I can't remember exactly what the 24 to 25 numbers are out there. But again, it was significant double digits. It wasn't quite, I think, the 40% according to Bloomberg. But that very aggressive decline has brought into the money this longer duration energy shifting use case. Because before you could do it with your best sort of long duration storage technology was pumped hydro. But the problem with pumped hydro is it's a very mature, proven technology, but it takes a long time to build. And there's not many solar farms built next to a mountain, right, where you have the topography for it. And you really need the batteries or the storage that you're placing at the solar site to be able to avoid that curtailment, right, and store it and manage the congestion on the line. So it's not needed everywhere straight away, but partly it's the declining cost just pushes longer and longer duration storage projects into the money. And the longer the duration is, generally, the better the round trip efficiency, the lower the degradation per cycle. So there's a bunch of sort of operational benefits related to it. But ultimately, it's driven by use cases. Like, why do you need this? Well, ultimately, you want to try and get as close to a 100% net renewable system as possible, right? And that it brings you a lot closer to make reality.
And is it an economic use case, or is there still a green premium to that level of firm, let's call it solar energy? Where do you see the numbers relative to, building gas or other things? I mean, you're sitting in the Middle East, very low cost energy kind of across the board, whether it's gas or oil or whatever. Why is the Middle East building out solar plus storage at such a high rate? Purely economics, or what's going on?
It's a great question, but exactly right. It is the economics, which sounds surprising given where we are in the world, and especially the GCC countries being such large oil users and exporters. But it's precisely that logic, right? So to take the Saudi example, Saudi Arabia has something called Vision 2030. And as part of Vision 2030, it is aiming to grow to 50% renewables by 2030. And this started from a very low base a couple of years ago. but we're seeing very, very aggressive renewables additions, which I've already mentioned. Both the record low PPA prices for wind and for solar have been in Saudi Arabia in the last 2 years. The results keep coming out. I don't remember exactly the cumulative number so far, but I think it's about 60 gigawatts of wind and solar have been built or in construction with awarded PPAs. It's expected by 2030 to get to that 50% goal. Somewhere between 100 to 130 gigawatts is needed. So it's a really, really aggressive build of the renewables. The renewables are already cost effective. Like I said, it's the cheapest form of electricity that you can generate, but only if you don't curtail it or have the congestion issues with the grid. And then we're seeing a very large storage build out to go alongside that. So FCC has the most aggressive, I think, build out program, Saudi Electricity Company, in the world at the moment to build up storage alongside that and provide the flexibility and capacity to allow that renewable generation to build. It's difficult because they've been procured separately to be able to directly compare it, but those prices that were seen on the most recent SEC projects, and they're in the public domain. I don't know if we have show notes, but I can share the links to some of the posts that I've made about this. But those came in on a split scope basis, adding the BESS and the EPC scope, essentially the installation scope together, to about $125 a kilowatt hour, roughly, fully installed. Obviously, very aggressive numbers, and well, compared to anywhere in the world except maybe China, they seem really, really aggressive. But when you combine those sort of economics, you're getting to very high levels of reliability without necessarily. It all depends. Also, I should say the last thing is, what are you comparing to? Because if your objective is 100% reliability, it's not really a fair comparison to thermal either, right? Because a nuclear plant is only 80-90% capacity factor. Same with gas. You have downtime thermal generation as well. So if you're competing to that 80-90% level, 95%, 99%, wherever it is, the last 5% to 1% to get to 100% renewable is really, really difficult and adds a lot of cost. But getting to 90-95, that's actually pretty economic head to head with thermal generation. And the reason that the Middle East is doing it so much is if it's cheaper to power your own grid with renewables, if you're selfish about it, right, you have more oil to sell. So it makes complete sense to be doing it. And I think it's a really interesting place in the world to illustrate just how far renewables have come. That even in markets that have a lot of skin in the game with fossil fuels, that it makes sense to build out renewables and storage instead.
It's almost as if Saudi Arabia is the Saudi Arabia of renewables, huh?
I mean, that's essentially the goal, right? Like the Vision 2030 is, it's only a stepping stone towards what will come after as well, right? Vision 2060, I think, right? The longer run, but it is an exercise to diversify the economy away from fossil fuels and into other industries, everything from tourism, but also on the energy side of things, to be an exporter of clean molecules, clean energy, or in the technologies that are needed for the world to decarbonize.
Yeah, I mean, it really is an interesting kind of symbolic situation for the world to see that part of the world basically using low-cost renewable power in order to export fossil fuels for other applications. And I think we will continue to see those sorts of trends in the world, particularly as we build out solar in the parts of the world where solar is incredibly cheap, which is not everywhere. And, the fossil fuels will start to migrate further and further away from, at least on the stationary storage electricity generation part of the economy, will migrate away from those areas where it's just no longer economically feasible. Pretty interesting trend. How big is the storage space today? I mean, do you, in terms of gigawatt hours or whatever, what's your latest view, and where do you think we'll be in 2030?
Globally, off the top of my head, I don't know. We're in the terawatt hours of deployed projects now. I think we crossed that threshold a year or two ago. So I globally, I don't know. If your question was Middle East, I have a better idea. So maybe I'll answer from the Saudi perspective, because I think it illustrates this trajectory very, very interestingly.
Yeah.
So if you rewind to before the end of 2023, there was essentially nothing grid scale storage connected in the Saudi market.
Yeah.
And what we've seen since then, the first sort of GigaBest came on is technically a off-grid system, but it was part of the Red Sea project, which is one of the Saudi Giga projects. And that was powering all of the hotels, resorts, and things that are being built around the Red Sea under Red Sea Global, with about 400 megawatts of PV and 260 megawatts, 5 hours of storage, lithium-ion battery storage. So 1.3 gigawatt hours came online the end of 2023. And then in the last 2 years, 2024, 2025, we've seen this massive build-out program by Saudi Electricity Company, where there are 11 projects that are all 500 megawatts, 4 hours rated. And in terms of the actual capacity that's in each one of these, it's more like 2.5, 2.6 gigawatt hours. So you can do the math quite quickly, right? 11 times the 2.6 plus this 1.3. You have more off-grid projects like Amala, which is another Red Sea project that's about 760 megawatt hours. You have the Neom Green Hydrogen Company. It's another 600 megawatt hour BESS as part of that. So adding all these up, it's depending on which analyst you look at and whether you look at just what's installed or what's installed and in construction. But by Benchmark Mineral and Romotion, one of the analysts in the space, it's viewed as the third largest market now, with projects operational and construction behind China and behind the US. So to move from there to from essentially zero mid 2023 is quite impressive.
I mean, I think when we last looked at hard numbers, maybe a year or two ago, we were thinking US market was like 100 gigawatt hours per year by 2030. And maybe worldwide was 4 times that, so 400 gigawatt hours a year. I've recently seen projections that are more like 2,000 gigawatt hours per year in 2030. So it's almost, it just continuously exceeds the forecasted expectations. I think else are just too embarrassed to write down what they really think could happen in terms of scale.
I think it's because it's an exponential curve, right? And it's very difficult. You look very silly if you get your exponential math wrong. But it's such a tipping point, because you talked about the EVs earlier. These two are not. It is a sliding scale. So why? Coming back to what you said earlier, why is Ford doing this? Well, it's actually most Chinese EV companies have done the same. There's not many specialist stationary storage cell manufacturers. They're starting to become more, but you're seeing a lot more pivoting of the cell and the EV companies into the stationary storage space, precisely because the margins are actually better than on the EV side. So you're seeing that as a way of combating the margin compression and the oversupply on the EV side because of the sort of the weaker than expected demand versus the supply. And that sort of tips the balance, right? Because if what the lower pricing on the stationary storage side does is then drive the demand up. It drives longer duration systems. Both of those then compound the annual growth rate. So at some point we will see it overtake. You'll see more the stationary storage market overtake the EV market because the rate of growth is very, very aggressive.
You've spoken in the past about Wright's Law. You want to explain to our listeners what Wright's Law is and where batteries fit into that?
So Wright's Law, it comes from the aviation industry, but it's sort of an analog to Moore's Law in chips and processing, right? Where most people have heard of Moore's Law, where you get double the processing power and half the space, right? It's this sort of exponential improvement in the performance of transistors. And essentially, batteries are more or less a similar material science technology, which is what same as solar. So a lot in the energy space, there haven't been many technologies that have been like that, and it's quite different to thermal power stations. It's quite different to even green hydrogen electrolyzers and things, right? The amount of improvement you can get where you can factory build products like cells and get improvements is significantly higher. And Wright's Law is a way of describing that, which is essentially every doubling of production volume, there is a learning rate associated with that where the per unit cost falls a certain percentage. And there's differing views on how to measure that, but roughly it's somewhere between 20 and 30% fall in cost for every doubling of production of cell capacity. And there's still quite a long way to go, right? Because the world isn't entirely powered by solar and batteries yet, and well, nor in an absolute sense will it ever, but like in terms of the hundreds of terawatt hours that we will get to one day, we've still got some way to go. But it is getting harder and harder to make that doubling and doubling keep growing. So we're starting maybe to get towards the end of the curve, but it's described the market very well up until now. And again, as you said, usually analysts have underestimated. And myself, I think I'm quite optimistic about these things. I'm always impressed with how much things improve, or have improved over the last number of years in terms of cell costs, performance, density.
Yeah, amazing. Amazing. So this is really learning curves of manufactured products versus the competition out of the fossil fuel industry, which is really an extraction industry. Like,
Yeah.
can you really reduce the cost of taking oil out of the ground or natural gas out of the ground? And every now and then there's a technology breakthrough. Let's look at fracking or something like that. But for the most part, it's a mature technology, and it's getting harder and more expensive to extract the more and more scarce resources out of less and less economically viable wells over time. And so you've got these macro trends that are really driving, I think, at the long scale, a very inevitable economically driven transition from one type of energy to another. How deep do you think renewables worldwide can penetrate? Suppose, these trends continue, you get massively low cost renewables plus massively low cost batteries. Could you power the entire world 100% on renewables? How do you think about kind of the end state?
I'm a techno optimist, but an economic rationalist. And so it's going to vary by market and location. But even considering that, if you consider the sun belt of the world and interconnection and being able to export that power, you certainly have the resource from an energy perspective to power everything. You have the storage capability. Again, there's different views on this, but the resource is not really the constraint. It's the pace of build out that can be the bottleneck, but you could build enough solar and storage to power the world. The problem with that is the distribution aspects of it. And again, I'm oversimplifying the story here, because in some places there'll be wind, some places you've got hydro, which makes more sense as the generation resource. But it's where does the economic tipping point lie? And there's a great Ember report. I don't know if you've had anyone from Ember on the podcast, but that might be a good listen. So the Ember team have done some really good work on looking at this by location. And they looked at, if you look at long-term weather data and look at solar plus storage, how much demand could you economically meet at a certain price point? And in places like the Middle East, you can get very close to 99% reliable supply of power. And in most mature markets, well, 99% on its own is not going to be reliable enough, right? Or do we accept 1% blackout or brownout? Probably not. But how do you fill that remaining 1% or a couple of percent that you can't reliably serve? Well, you could do that with natural gas. And I think economically, that's likely what will happen. We'll see a mix. Because there's a common, I guess, like criticism of saying, oh, you need a fossil fuel grid to back up the renewable one. But it's ignoring exactly the point that you kind of dug out with the cost for fossil fuel grids is the fuel. It's not really the plant. You can have a power station, and if it runs very, very little, it's going to cost you very little, because the gas is the expensive part. So if it's to ensure a certain level of reliability at the lowest cost, well, the solar and storage gets you the lowest cost. So that's kind of where I think most of the world will get to.
Let's take a step back now and shift gears. I wanted to dig in a little bit to your experience back in the AES Fluence days. You were doing your PhD with support from AES, got involved in the storage space, then joined the company directly. AES is one of the pioneers, is developing some of the very first battery, grid connected batteries in the world. Take us through the journey at AES, a very large IPP energy company. The thought process for ultimately deciding to I guess, spin out, their in-house capability into a new company, Fluence. And then, the early days of being on your own in a startup, of course, you had the support of two major corporations. But walk us through kind of the startup journey of Fluence and um, what you learned there, what the challenges were, and then ultimately would love to have a conversation about kind of business model and integrators versus the vertically integrated cell companies, et cetera, because I think that's a key kind of strategy question for the ESS world.
Yeah, sure. Like one of the most interesting and exciting times of my life. So I think it's a really interesting thing to dig into.
Hmm.
So to take it back to the beginning, as I said, I got involved about 2009, but AES Energy Storage as a name and idea, a brand, maybe started about 2006, 2007. Two co-founders in AES were Chris Shelton and John Zaharanchik. And that basically it stemmed from an idea of what could be the next big business in the energy space. And it started out looking at basically using EVs and sort of vehicle to grid, but EVs weren't really there at that point. And so it was sort of just an idea stemming from that of, well, we don't really need the EV, we just need the battery from the EV. So they sort of had the germ of the idea, which developed into some of the first in-house projects. So this was this time not a company set up to sell to third parties, right? It was more to create competitive differentiation for the generation fleet. So it was looking at use cases like how could I make my thermal power plant run more efficiently with less ramping up and down. Maybe I can lower my minimum generation. Maybe I can free up some capacity. And so it was these kind of use cases. And the AES had quite a large fleet at the time. So it started there with some of these first projects. I mentioned the first one that was kind of commercially deployed was in Chile at a project that basically was enabling an AES thermal asset to not have to provide spinning reserve to the grid, right? So there was a capacity preservation, which prevented the power plant from running at full capacity. And having a battery there basically with a lot of discussion, I guess, with the regulators, eventually was allowed to release that capacity. So the batteries were there to provide that reserve when it was required. And that basically would entirely work, even with the economics of batteries 15 years ago. Right? You imagine how much more expensive they were. Very quickly paid back for itself by just allowing the thermal generation to run with 20 megawatts more power each hour of the day.
Yeah.
So that's
was that the first real grid scale battery in the world, or were there others?
There were
To your knowledge.
there was always sort of, let's say, R&D and let's say taxpayer funded types projects in the US, in Europe, but like in terms of first commercial projects, I think there's certainly that I'm aware of. I've never heard one earlier than this, right? Where it was an equity check written basically to build the project by AES, right? And to have a positive return on investment for itself. So that to me is maybe the key difference. It's moving from
first real commercial project. And how large was the battery, and what was the chemistry?
First one was 12 megawatts, and it was about a 15-minute system, or a quarter time, 15, 20 minutes. So very high C rate. I don't recall whether that one was, because in the very early days, there was A123 systems. And I think that was LFP, and there was a switch from LFP to NMC.
But it was lithium ion.
So there's the whole thing, but it was lithium ion. Yeah. And this sort of slightly predates my time. This is what was going on a year or so before I got involved in the PhD program. But over the 2009 to 2013, that first sort of project spawned into more projects, both in the US, but there was a real push around the world. And that's sort of let's say the inflection point or joining points at the end of my research, where the AES leadership at the time wanted to launch a 10 by 10 program. They call it, right? 10 megawatt projects in markets around the world. So there was a sort of general call across all the businesses to go and find use cases basically around the world. And the one that I worked on in Northern Ireland was at a coal power station. And it was a similar sort of proposition that you could get paid for providing what's called primary operating reserve, which is basically an ancillary service. And the idea was, well, we could do that with a battery and install it at the coal plant, get paid for providing that service as an additional revenue stream.
So even at this time, or I should say, at this time, batteries were being viewed as, let's call it stabilization for the grid in various different ways, and nothing to do with renewables. You're installing batteries at a coal plant. You're doing them thermal generation in Chile. It's really all around grid stabilization as opposed to sort of bulk shifting of
correct
solar energy or sort of other renewable intermittency.
Yeah, all pretty short duration stuff because, again, the battery cell costs at that point might have been, and I don't remember exactly, but over $1,000 a kilowatt hour, right?
Right.
So
right.
You couldn't afford to do very long duration, but the value that you could get from having 15, 20, 30 minutes of storage was still very significant because of these side, let's say, benefits to the overall optimization of your position or portfolio. And also because the generation sites offered a pretty efficient way of deploying because you already own the land. You usually have a connection there. In the case of the one I worked on, Northern Ireland, 2013 to 2015, it was built inside the coal power station in what was going to be a cable room for a future phase of the coal plant that never got built. So we didn't have to construct a building. And that's, again, a big difference to where we are today, right? It was inside a building. It looked more like a data center, a set of server racks. But
or shall we say Moss Landing?
Yeah.
Okay, great. So how did the decision get made, as far as you know, and I know you may not have been the decision maker, but walk us through how Fluence came to be as a standalone company. So it's a pretty big strategic decision, to take this competitive advantage and then spin it off.
So I think the recognition was, large as AES was as a player and a developer, the opportunity for the energy system as a whole was significantly larger. AES did not have generation projects everywhere. So there was a clear need or clear opportunity because the recognition that everyone would want to benefit from this type of competitive advantage. And no one was selling storage systems. No one was offering it. All right. So that was kind of probably the key recognition that, like, this opportunity is larger than the, opportunity to make some kind of small commercial advantage to the utility. And it would be better to set up a company to do that. But because it required very, let's say, rapid iteration, rapid evolution, and to find the market fit and the product fit, that it made sense to do that as a new business as opposed to within the existing business. And that was very similar. As you say, I wasn't directly involved in those discussions between AES and Siemens, but there was a clear fit, a clear idea, very similar that Siemens had on the European side, because AES had been very strong in the US. Siemens had been building a footprint in Europe with grid scale storage. So there was quite a complementary mindset with both organizations realizing, look, we're very large companies, probably without the agility and entrepreneurial mindset required to be able to, to scale this to what it could be. But we will resource and carve out these two parts of the business into a new standalone company, a new standalone culture. So it's a very unique kind of startup journey to be, part of the founding team of Fluence, because it wasn't a traditional, couple of co-founders thing. It was backed by the two companies and carved out the what had already been built.
Right. And was AES already collaborating with Siemens in a pretty deep way
prior to the JV? Not really. I mean, there would have been, let's say, transformers or energy management systems, that side of things. But no, that came out of the discussions and recognition that there was just to build a global footprint and to pool resources and scale and learnings. There were even two different product platforms, so that took some harmonization to figure out what was the best fit and in different regions.
And so how big was the team, and when the JV was created, what time was that? Just trying to get the timeline.
So there was
minds here.
Yeah. So as I said, when I started getting involved with that part of the AES team, it was maybe so 30 people in 2009. By 2016, I think there was about 50 people. So it's sort of grown, but it wasn't like exponential growth. And on the Siemens side, I think it was about 40. So roughly 90-ish people joined to form like the new company. So as I say, compared to a traditional startup and growth rate, it started very well backed with kind of like the two regions, established. But
Right. And so then the company ultimately became independent, um, went public in what, 2021,
2021.
2022? Yeah, something
2021.
like
So
that.
after 3 years, so it was formed 1st of January 2018.
Yeah.
Reached a unicorn valuation after about 2 years with an investment. So it was 50-50 with AES and Siemens. And then the first sort of third-party investment was the Qatari Sovereign Wealth Fund, which gave it a unicorn valuation. And then within another year, the decision was made to IPO and to spin off part.
You know, and then I'm just looking at stock price here now on my phone, but sort of $4 to $5 billion valuation through its life. So probably a pretty good outcome for Fluence and Siemens. Fluence, at least from an outsider perspective, they were one of what I would call sort of the integrator models, that were that grew up to meet this need of energy storage when there really wasn't an industry there. And Powen Energy being another example of that. There's a few others in the world. Can you walk us through what that model looks like and what the challenges and advantages of it are, particularly as we think about sort of what grew up over the last, I don't know, call it 4 or 5 years of vertically integrated companies, sort of basically the cell companies, particularly out of China, but also Korea, who kind of moved into the systems part of the business. And then how do you view the dynamics there in worldwide?
Yeah. So there isn't a single right answer to this. And it's also, I think, evolves with time. So I'll rewind to the logic at the time of the integrator model. So integrator basically is working with, and there's different levels of how deeply you might integrate the equipment, but it's basically assembling, putting together, and guaranteeing standing behind a complete product without necessarily manufacturing every major component. And in the early days, again, even this design evolved a lot because those first projects that I worked on were you would have string inverters even. So we've come back to string inverters now, or it's become back in vogue. But the idea of string inverters are very modular racks. So you'd have 80, 90 kilowatt string inverters, which were made by Parker Hannifin. The battery cells, the idea of not making the cell, but being able to pick was partly down to use case, right? So you had very different use cases in different markets. And depending on what those use cases were, different chemistries were a better fit. And you also didn't have, well, you had this very, very aggressive race and cost declines. So betting on one horse was sort of viewed as the wrong strategy because in those few years, there was a lot of switching between suppliers' chemistries and being able to leverage negotiating power and buying power between different OEMs of the equipment. But over time, that there's been more vertical integration, I would say, and Fluence, where it is today, looks a lot more vertically integrated than it did. It currently still doesn't manufacture the cells directly because those are done through partnerships, but everything except the cell is kind of now manufactured in-house. But that wasn't the case at the start. It was a lot more picking the major components to work together. And so that's evolved. There's the other extreme is the full vertical integration, including the cell, but also the upstream refining, the mining, all of that. And that's where you see a lot of the Chinese companies generally sitting and playing in, but they don't necessarily, there's very few actually that go all the way from the upstream, the raw materials, mining, cell, through to full system. They might make a DC block, which is part of the system, but there's very, very few that actually, in fact, the only one I can think of that does the whole system is in China is Envision, where they make the PCS and they guarantee a full product. Usually that's partnered in as a separate component of the system.
And do you think that'll be the case going forward, or do you think let's call it the Chinese incumbents, will continue to try to integrate downstream into the projects, et cetera? I mean, and there's some challenges there, of course, both politically as well as,
Mm.
just being close to the various markets. I think, our view is I mean, the Chinese economy is amazingly good at making the thing,
Yeah.
but not so good at, being close to the customer in the local markets,
Yes.
dealing with support and, kind of quality at the site, et cetera, software.
Hmm.
How do
Yeah.
you see it going?
Well, there's still this tension as well between lowest cost is not necessarily best value, right? Meaning you can
Mhm.
optimize, and this is kind of interesting because there's all sorts of dimensions you can do it on. But one of the clearest dividing lines between maybe the label isn't going to be no one's necessarily going to like being labeled one way or another. But like if we
Yeah,
call the integrators, meaning anyone who doesn't make the cell in house, and
yeah,
vertically integrated anyone who does,
yeah.
then within those two buckets, there's a very clear dividing line that you can look at. If you look at Tesla, Sungrow, Fluence, a lot of the Western players, but Sungrow as well in China, when they're not making the cell, they've all offered and developed these AC blocks and are focusing on, the system economics and system level density, the simplicity of installation. So it's not necessarily a China versus other. It's the integrator versus
Integrator
non-model.
versus, yeah.
Whereas everyone who's vertically integrated with the cell typically is stopping at the DC block and doesn't go further because that's what they're good at. And so if they either don't want to sell more than that, or if they are, they will partner in with the PCS and the EMS. So that's quite a clear dividing line in the market at the moment. That anyone who doesn't make the
Interesting.
cell has
Mhm.
gone kind of more around the full AC. Tesla's gone further with this mega block idea to even MV optimization, which is quite interesting. And then on the other side, you've got those getting very, very good at the cell to the DC block level. But as you say, it's not necessarily the optimizing for the full project and the full market reality.
So in your current job, you're a major buyer of battery systems. What are you buying today? Are you buying integrated solutions, or are you buying from the let's call them the vertically integrated cell companies? How do you think about that? Is it a mix?
So the split scope is generally accepted in a lot of markets. In the Middle East, it's starting to come through. Split scope
What
meaning
do you
that
mean by, yeah?
so ESS, meaning energy storage system, it can be all in one box, so to speak, which is what I'd call like the AC block, where you have the
Yeah,
batteries, the controls, the cooling, the safety, the
yeah,
power electronics, all in one. Or it could come with the DC block plus an MB skid, which has the power electronics and the medium voltage separately. But regardless of whether it's a DC or an AC block, having that full scope up to the PCS and including their energy management system is a sort of minimum core requirement. Because going more disaggregated, there are companies, developers, parties willing to take on that risk appetite because you can cut out some of the margin stacking, but you take a lot more operational risk if the components don't talk to each other. So to me, based on sort of the lessons I've had over the last 15, 16 years in the industry, it's pretty important to have all of that rolled together. I'm more comfortable with the idea of a separate installation contractor because the products have become so much more factory standard that it's relatively low risk to have someone else do your civil works, your installation, your cabling. But that's sort of let's say, from my personal view, the minimum that I'm comfortable with. Anything else there, yes, you could squeeze out a little bit more value, but the risk you're taking on probably isn't worth the reward to go more disaggregated than that and buy just specific components or just the DC block and then buy the inverter separately and the EMP.
so you're a fan of the integrator model as a customer.
Well,
Is that what I hear? Or
I would say, well, it depends what you mean by integrator, right? Because even the companies that I mentioned, the DC block suppliers, they
yeah,
will offer typically an integrated solution. They don't vertically integrate everything, right?
into the product. Okay,
They
yeah,
bring their DC block. They will procure the PCS, the transformer, the EMS, and offer you and stand behind the product. So it's still a complete product you're getting, but it's not the same as the complete product you're getting from what you call a more pure integrator, like who are doing all of this in-house. So I would say that it's a minimum to get an integrated ESS, but I'm a little bit more agnostic as to how it's achieved between those two.
Got it. Got it. Can anybody compete with China?
Well, you're seeing, so it depends on what you're competing for, right? Because on
Yeah.
price, like you said, I think that's very, very difficult. But price is not necessarily value, performance, et cetera, et cetera. So the differentiation you see, and Western integrators are still holding pretty decent market shares in the European market, in the US market. US is maybe I'll focus on Europe a bit more, A, because I know it more, and B, because there's a bit more of a, say, skewing with the US market with the tariffs. You don't have that barrier as much in Europe, but you still see a lot of the Western integrators having a lot of success in the European markets, be that Germany, Italy, UK. That is partly down to, I think you touched on it earlier, right? Which was the solution oriented and full system mindset. So some of that can be very basic, which is having local team, understanding the language, the mindset, the culture. But partly it's also really optimizing for things like revenue as opposed to lowest cost, because you can demonstrate a better value system one of two ways. You can reduce your capex, you can improve your round trip efficiency, you can reduce your O&M, or you can make more money for the system that's running. Like Tesla in the UK, I think the auto bidder is maybe out of date, but they're certainly in the past, they've been amongst the very top ranking performing systems. And being able to offer that software with the hardware means even if it's a more expensive piece of hardware, if you're demonstrating you can make more money, that's a huge difference. Fluence in the German market recently won a 1 gigawatt, 4 gigawatt hour project, Europe's largest as announced so far. And again, don't know the particulars, but that will be against intense competition given the scale. And it's likely to be differentiation again on those sort of things, software, services, confidence of support. Given there are a lot of very hungry players that are willing to bring down their price in China, but it's similar to the solar world 10 years ago of, will this company be around to honor its warranties? That's sort of, I think, some of the value that's brought. And another angle that could be quite interesting is the cybersecurity one, right? Maybe comfort using the battery cells, but any BMS, any controls that are being made in China might be more of a security concern. If you think of the way the US administration is set up, even Europe is becoming, I think, a little bit more concerned about these sorts of aspects as well of system design.
Yeah, sure. We definitely are seeing quite a intense focus on that particular question in the U.S. I mean, you've seen the foreign entity of concern language in the tax law. You've seen some of the bans on the military level of Chinese-based systems. Our view is that we think that will continue. I think most places view their energy infrastructure as a critical national security resource, similar to the telecom networks and things like that. And so we do think there will be a differentiation around kind of national origin and national security. I mean, we don't build F-16s in China, right? And so there may be other pieces of equipment that we as societies decide you need to control your own destiny with respect to energy or own critical needs. So I think that probably is a continuing trend. But in the end, you still, I think, need to be competitive worldwide from a cost perspective. At this point, would love to hear your perspective on where things are going from a technology perspective. This has been a very dynamic market. We talked up front about how more and more companies and solutions are being brought specifically for the storage space as opposed to general purpose batteries or borrowed technology from mobile and EVs. There's a lot of buzz in the industry around sodium ion, which I know you've weighed in online. There's some other non-lithium technologies out there, and companies like EOS, for instance, that are developing products that seem to be doing fairly well. Certainly, if you look at their stock price, the company has progressed quite far from where it was when it first went public. How do you think about kind of the future trends of maybe differentiated technology solutions relative to where LFP is, which is, of course, the dominant technology, and there's plenty of innovation happening there too, both in terms of energy density as well as some of the more bespoke design solutions like super large cells, high loadings for lower C rates, longer durations, etc. Put it together for us.
Yeah. So I've swung between two extremes of this pendulum, because I mentioned when I came out to the Middle East at end of 2023, I think there wasn't a full appreciation of how aggressively storage, specifically lithium ion, was improving at that time. And so there was an underestimation of the role it would play in the longer duration space. And by longer duration, I mean the 8+ hours. Sort of, there's different definitions of this, but that's sort of the Department of Energy and the Long Duration Storage Council's definition. So in the early days, but the advantage of that is I got an opportunity to look at a lot of other technologies, and bring in maybe, I don't know if you call it my rationalist or maybe my techno-optimist view, but in the end, it's sort of proved out with the declines we've seen the last 2 years, that pendulum swung almost fully the other way, where even in the 8 and 10 hour space, there is nothing that I've seen that today would compete with LFP in most places. There is always going to be niche opportunities, niche cases, right? And there are, the challenges, and the biggest maybe complementary technology that's mature would be pumped hydro. The issue is, by the time you build your pumped hydro, which can take 5 or 7 years, plus your permitting, plus everything else, because these are big civil infrastructure projects, the projected cost of where the LFP will get to beats out the economics of where pumped hydro would be. So that was kind of the issue we were seeing. But now, because it's swung so far, that everything looks like LFP, especially when the geographic importance of being right next to your solar or your wind is in most projects. We talked about that a little bit earlier, that there's this grid optimization piece that you can only achieve by having co-location. A lot of technologies where they have a sweet spot is often related to geography, right? So mountains or any kind of mechanical storage, it could be mine shafts, it could be with compressed air, that can be competitive, but you need the salt caverns in the right place. So there's a whole bunch of technologies that may have, a role to play. So I'm not going to be absolutist about it, but in general, it's very hard to beat the LFP economics today. But as I said, when you reach that other end of the pendulum, I have to kind of start pushing back the other way and saying, look, it's not a sensible strategy, especially given the geopolitical dimension to it, to necessarily be fully reliant on one technology choice. There's resource diversification benefits. So there's the hedge element to it as well, which is, we've had supply shocks in the past. How do you mitigate those in the future? And in the Saudi context as well, right, there's also this idea of localization and building an industry here. And I think most parts of the world, perhaps excluding the US, struggling with this, right? Building localized supply chain cell manufacturing is very, very difficult, because to compete with China, where all of the expertise and the adjacent industries, the raw material refining is very difficult. But when you move into new technology spaces, that opportunity is potentially there. And so we've had these discussions offline before, but this is why I think sodium ion is a very interesting technology, because it benefits from a lot of those same Wright's law type structures, right? It's very similar chemistry, very similar production line, very similar R&D, but it has some particularly unique advantages in terms of performance, especially in extreme climates, high temperature in the case of the Middle East. And because of that supply chain being a little bit less consolidated in China, right? It's hard to have a monopoly on salt or soda ash.
Yeah. No, I think I completely agree with you. I think it's pretty clear that, electrochemical batteries, nothing will compete with electrochemical batteries. I mean, it's a game over situation. So anything outside of that probably is going to be a niche one way or the other.
Yeah.
And then within the battery world, it's pretty hard to believe that unless you can beat LFP, you're going to have a real business there. And in order to compete with LFP, feels like you need to have a production process that benefits from the trillions of dollars that have been put in the ground to make LFP cells. And this is sort of why we at Peak originally were pretty interested in sodium. I mean, the bet that the company made 3 years ago was that sodium ion would scale, would scale in China. And even recently, we've seen some pretty major announcements from CATL and Runbay and, a number of the sort of material supply chain companies that I think really validate that original thesis that things would scale. You would achieve Wright's law type cost downs on the back of what's happened on LFP. And one of the things that is pretty encouraging from our perspective is that we've also seen that the performance improvements, particularly around energy density in sodium ion, particularly NFPP, have gone at a rate that's probably 2 to 3 times the learning rate of what we saw in LFP because it's so similar. And so, the bull thesis on sodium is that it gets to a lower cost faster than LFP could because it's built on the same sort of infrastructure and learnings that happened out of that industry, but as a raw material set that is more abundant, more distributed, and lower cost ultimately. And then in the short run, because of its performance advantages at the system level, you can actually build a business that can generate some scale and then ultimately ride the wave of what's happening at the pure cell level, which we think is inevitable now, given the investments that are being made in China. So kind of a second cousin to lithium ion, has many of the advantages and scale advantages that have been built over the last 2 decades, but doesn't have some of the same downsides. So we shall see. We shall certainly see. So tremendous innovation happening in the space in general. One of the key themes, though, is I think it's going to be harder and harder to have a business that is focused on cars and stationary storage. These things are turning out to be quite different in terms of their technology and application know-how. And stationary storage is growing at such a rate that it's now a massive industry of its own, and it's starting to attract companies that are dedicated to winning in that space.
Yeah. I think I saw the stat that it's about 20% of the battery storage market is now ESS as opposed to EV. I mean, consumer electronics are in there somewhere, but it wasn't so long ago that was 10%. And this compound annual growth rate we're seeing in the grid-scale storage space means we'll get to 50-50 probably a lot sooner than people think, because the longer and longer duration systems that are being deployed in stationary storage, you're kind of fixed on your C rate for an EV because you've got a range and a footprint constraint. So I think that leaves plenty of space for technology optimized for stationary storage. And like you said, it's a little bit down to the timing, and I wish you the best of luck with getting that timing right, because it is a knife edge, right? To be not too early, but not too late with that scale up curve.
For sure. Timing turns out to be incredibly important in company building. I used to think that, as entrepreneurs through intelligence and strength of will could make their idea into the world. But it turns out having the right macro environment and the tailwinds to support something absolutely is incredibly important. And I always say my favorite definition of a startup is it's the art of staying alive until you get lucky. And it's by no means easy staying alive until that happens. But when it does, boy, things just take off. Well, Marek, wanted to really thank you for joining us on the pod. A super interesting conversation. I don't know whether you had any last thoughts about the industry or where we're headed.
One thing we didn't touch on in the chat so far is speed. And the speed element is also really important as to in the discussions we were having earlier about why solar and storage is. It's often also the fastest way you can build capacity.
For sure.
And we're seeing that trend like in the Middle East, but also I know in the US, right? There's this real rush for AI infrastructure. The fastest way to power up new hyperscalers is solar and storage. And generally it's the cheapest as well, unless you're unmothballing old mothballed thermal plants.
Yeah.
So maybe that's probably maybe a closing thought as well, because there's such a large drive to AI growth, both in United Arab Emirates and Saudi Arabia, particularly looking at the Middle East, which is also why we're seeing this. And of course, you don't have the land constraints in this part of the world, right? You've got vast amounts of desert, very strong irradiance. So some of those particular factors are quite important, and they all just feed into that same virtuous cycle of more volume, right? Slower, lower cost, better import.
Such a great point. And it struck me. I was listening to John Ketchum, who's the CEO of NextEra, talk not too long ago, and of course, NextEra is one of the largest independent power producers in the world, if not the largest. Certainly, the largest owner, operator, and developer of gas power plants in the United States. And he was pounding the table for solar plus storage for exactly this reason. Right, the turbine companies are sold out for 6, maybe 7 years. So there's sort of a pipeline that's being developed, but costs have gone up 2 to 3x on the capex side over the last 2 years. And if you really look at the demand growth, which we certainly in the U.S. have not seen for 50 years, driven by actually not all by AI, but the urgency is for sure being driven by AI data centers. There really is no other solution other than really large batteries, which can, of course, through load shifting, actually just increase the base load capacity of the grid, but also coupled with renewables. And it was striking to hear, Ketchum basically say renewables are going to be a bridge to gas, which I thought was completely reversed, because it was always that gas was a bridge to renewables. And it strikes me as completely implausible that if you continue to scale renewables and battery over the next 6 to 7 years because of speed, and Wright's law kicks in and the industry gets another, 3-4 times larger, that gas really becomes the choice economically for energy worldwide. It seems ridiculous to me.
Yeah, I struggle to see that as well. The only factor that could influence that is where does this law bottom out, right? Because there is a flaw, and this is where I think again the sodium ion argument becomes quite interesting, because LFP's flaw is driven by cost of raw materials. You can get to about 20-ish, maybe $25 a kilowatt hour. If you strip out everything else, you'll never get there. It's your theoretical flaw. Unless you can find, and you can't necessarily bet against innovation, finding a much, much cheaper way of extracting lithium. But that flaw isn't the flaw if you switch chemistry. And this is why I say my interest is batteries as opposed to lithium ion specifically, because even within lithium ion, we've seen multiple chemistry switches, NCA, NMC, LFP.
Of course. Yeah.
These all have evolved. And I think NFPP in the sodium ion space is a natural evolution of that. And you can potentially get to a floor in the single digit dollars, right, with the raw materials costs because they're so low.
Fantastic to have you here in conversation, Marek. I really enjoyed it, and I'm sure we'll be chatting offline as well. But thank you very much for your time and for sharing your expertise. One of the true greats in the industry. You've been here since the beginning, have a really unique perspective from where you sit now in the Middle East. Thank you so much for sharing with the audience here.
Very kind, Cam. Thanks a lot. I really enjoyed the chat. It's been good.